Good afternoon and a very warm welcome to Splento's virtual roundtable discussion. My name is Gemma and I'll be your host for the next hour. And how fortunate am I to be hosting, as today we'll be covering the very hot topic of UK startups and government funding. So if you're a founder, you work in a startup, you've invested in a startup, or you were or are considering investing in a startup, you're certainly in the right place. So for us at Splento, we decided to host this roundtable as we felt it's important that supporting each other, having access to solid information and using our voices is exactly what we need at this time, especially in the startup and high growth business community. So we really appreciate you spending your time with us this afternoon. And for those among us who aren't familiar with Splento, we are powered by impressive tech and an awesome team. And together we help businesses and consumers all around the world create their narrative through photo and video content. I've been with the company now 9 months, and when I'm not hosting roundtable discussions, I oversee customer success, and that's ensuring that our customers meet their objectives when working with us. So before we dive right in, because I know that's what you're all here to do, let me give you a format of what to expect today. So first, we'll take a few moments for each of our panelists to briefly introduce themselves. Next, I'll kick off the conversation and ask any questions that draw out the experiences and the points and the information that we should be discussing today. And then for the last segment of our time together today, I'll open up the discussion for audience questions. So if you have any questions you want to submit to the panel, please check the bottom of your screen. There's a Q&A button, and please submit that and we will address those at the end. Okay, so does that sound good?
Great.
Great. Okay, let's get started with the panel introductions. First, I would like to hand over the virtual floor to Anthony.
Hello everyone, I'm Anthony Rose, founder and CEO at Seed Legals. If you're doing a startup funding round, don't go to a law firm, this is the place to go. More recently, I seem to have gotten myself involved with the government's Future Fund scheme. I think the government announced it, a bunch of VCs said it was an amazing idea. I looked at it and found that it's got issues that make it not suitable for many startups. I wrote an article on it. I think that was the equivalent of lobbing a grenade in the room, and now I guess in the you break it, you bought it, I now need to be on webinars and explain to companies how they can use it or not use it, as the case may be, which I'll do in a few minutes' time.
Fantastic. Thank you so much, Anthony. Okay, next, welcoming Mark to the roundtable.
Hi, Gemma. Good to see your video.
Indeed, Mark. We're so glad to see you. Please introduce yourself.
Hi, I'm Mark Brownridge. I'm Director General of the Enterprise Investment Scheme Association. So we're the trade body for the EIS and the SEIS industry. Hopefully you know what schemes are. They're schemes to help startups get funding from investors, particularly angel investors and IFAs and high net worths. So we do two things really. One, we work with government to try and make legislation better, more effective, good things like that. And then secondly, we try and raise awareness around the schemes and who can benefit from it, whether it's entrepreneurs or founders or startups, or whether it's investors who are looking for new early stage investments to look into. So we kind of act as a hub between those two elements.
Right. Vital service. Thank you so much, Mark. Okay. Next, welcoming Bruno.
Hi, hello everyone. I'm Bruno Moraes, country manager of Wire UK. So we are the open innovation hub of Telefonica. We scale startups by providing business opportunities and connecting the startups with Telefonica and with our customers, our more than 300 million customers across the world. I've been with Wire for just a few months now, and I've been an entrepreneur myself for the last 12 years before that.
Great, there you go, a vault of knowledge. Thank you so much, Bruno. Let's hand the floor to Ray.
Hi, I'm Ray. I'm the founder of free.co.uk. We're in startup mode, so we launch in August to help people sell their home for free. I previously founded Unmortgage, where I secured a £500 million partnership with Allianz and raised £10 million pre-product, pre-revenue. And what I would like to say to all those people who are panicking about starting up at this time, during the crisis, I've raised £500,000 for a business with no product and no revenue. And so it is possible, and it's largely about relationships than it is about anything else.
Vital piece of advice there, Ray. Thank you so much. You're jumping in already. I love it. To introduce themselves, next is Roman.
Hello, my name is Roman, and I'm a founder and CEO of Splento. We help businesses move from offline to online by providing a range of tools and services, photography and videography tools and services.
Fantastic. Thank you so much, Roman. And our last panelist for today is Stepan. Please introduce yourself.
Hi, everyone. My name is Stefan Goliath, the founder of Goliath & Co. Multifamily Office. I believe we're the first multifamily office for angel investors in the UK specifically. And if you happen to be a dragon or ultra high net worth individual, you should come to us and we can help you with the full journey from due diligence to sealing the deal for any startup.
Fantastic. We hope you've got some aspiring dragons in the audience. Okay, great. So now we are all connected. Mark, I will be coming to you first. So let's really kick this off with setting the scene for our audience. And as the Director General of EISA, which is the Enterprise Investment Scheme Association, which has been an internal cog of the Save Our Startups campaign petition, can you just share a bit about what the campaign and the petition was about and what you were trying to achieve with that?
So yeah, Startups campaign was a conglomeration of a number of companies like ourselves, and organisations like ourselves who saw what was happening for startups at the moment. We've seen a number of measures out by the government, as I call them, the four horsemen of the apocalypse, in terms of C-bills and bounce back and future fund. I'll leave Anthony to talk about that. Innovate UK grants as well. But what we didn't see was any kind of landscape for the type of companies that we work with, and those type of companies are generally early stage, pre-revenue, often EIS and SEIS and VCT qualifying. So we felt there was a whole slew of companies, perhaps somewhere in the region of 10 to 20,000 companies who weren't get any funding or able to access any funding at this obviously incredibly difficult time for a lot of companies. So start our Save Our Startups campaign even difficult. The genesis, the idea there. So Crowdcube, Luke Lang at Crowdcube had the idea of trying to get this going. So it's kind of really trying to focus on three main areas. One is trying to ease up the landscape for funding for EIS investors and SEIS investors to be able to kind of participate at this time and invest in small startup companies. And there's some other bits and pieces in there around trying to help Innovate UK get grants out to those companies and just trying to make it generally easier for funding to get through to small companies at this time. So the government's kind of in listening mode at the moment. So we're talking to them about various ways and means they might be able to help. I think I don't know if Anthony knows any better than I do. As I understand, the Future Fund is going to be launched on Monday. So we'll see what happens with progressing that. But at the moment, we're still kind of trying to push, as I say, those kind of 10 to 20,000 companies that we think aren't really getting any government support or help at the moment. It's great to hear kind of Ray's story a minute ago saying that he's managed to raise money through this time because he knows and has relationships with a lot of angels and investors, etc., etc. So we did a survey of about 250 companies who said kind of the same thing, that they were having good discussions with investors, with angels, with retail investors even, and getting a long way, and then COVID hit, and those discussions just fell away very quickly. And that was largely based on relationships as well, because they didn't know their investors particularly well. They couldn't develop those relationships. We're still getting to grips with things like Zoom and various other kind of channels for doing that. And obviously, raising money is very much a relationship thing. Investors tend to invest in people. So if you can't meet people, or you find it difficult to do that at this time, it makes it incredibly difficult to raise. So yeah, we're still kind of fingers crossed that the government are going to move into action mode and out of listening mode. And yeah, we'll see where we get to over the next few days and weeks.
Lovely. Thank you so much, Mark. And obviously, thank you to the founding members of Save Our Startups campaign and also the supporting partners and all the signatories, because as you very eloquently said just there, that it's needed. because there are people who are still falling through the gap. And, you know, moving timeline-wise from the startup community, from being forgotten to then starting the Save Our Startups campaign petition, then moving to the Future Fund, which was announced towards the latter part of last month, which, as Mark suggested, will be launched on Monday. So, Anthony, please can you give us an overview of the Future Fund, please?
Sure. So, you know, the government's been handing out lots of money to different segments of the country. So, you know, if you're a big company and you've got revenue and profit, you can qualify for CBILS, but startups don't have revenue or profit, so they can't. The government then has its furlough. So anyone who's employing people can, you know, reduce their costs by furloughing them. And now there's the bounce back scheme for 20 or 5 or 50K, which if you know, the average startup will buy you another few months, but not anymore. And so, you know, in this smorgasbord of things that are available, which of them would help you? And the one that you've read about, you know, called Save Our Startups and so on, is Future Fund. And it's designed as a convertible loan from the government. You don't need to have revenue, you don't need to have profits, but of course, to avoid anyone you know, just putting their hands up. So there's some criteria, and the criteria are that you've raised more than £250,000 in the past. There's some speculation that it's only from VCs or something. None of that's, from what I see, is the case, as long as you can show that you've raised before April the 20th. So don't rush to close around now, because that doesn't look like it will work. If you've raised more than 250K and it's a UK company, then in theory you're in, which sounds quite good if you've raised more than 250K. If you haven't raised 250K because you've done your average £150,000 SEIS round, bad luck, you won't qualify. So now you qualify. Excellent. So the next thing is, the way it works is the government will match fund investors, and you have to find at least £125,000 of investment, and then the government will match that with its own investment, which of course means the bar is you have to find £125,000 more, which is okay, but here's the catch, which is it's being done as a convertible note, and convertible notes are not compatible with SEIS or EIS. And this means that the SEIS, EIS investors that you probably had in your last round, or you were probably looking for, because 80% of all early stage UK funding is from SEIS, EIS angel investors, they won't be able to get their SEIS or EIS. So you're going to have to persuade them that either you need the money or you're going out of business, or otherwise to invest, because it's a great business and the government will co-fund. But I think it's going to be problematic, and you know, you're going to have to work super hard, read Donald Trump's The Art of the Deal, or don't read that, to go pitch to your investors that they won't get their SEIS, but nonetheless should invest. Now, there's one gotcha which you should be careful of, that in the EIS legislation, that if an investor invests or gets shares without EIS, they can never get EIS in the future. So even if you persuade your investors, hey, you know, invest 20K, you know, if I get 6 of you, I've got my 125, the government will match it, you should be aware that they can never get EIS in future rounds. So that's a serious problem. The way it will work as a practical thing, on the government website, there's a term sheet. You know, there are lots of people saying, well, we think it'll be X, or we're not sure. Actually, the term sheet, if you read it, is pretty clear what it is. They still need to make the long form version of the document, but broadly, you're going to have to find investors. Probably on the government website, there'll be some document to download and fill in to put the details of the investors and their investments. The government will then co-invest. Everyone will sign the document. The government will want you to do anti-money laundering checks on those investors, because, you know, it'll be a bit of a scandal if government, you know, co-invests with drug cartel. Is not a good look. So they're going to want AML and KYC checks. And then the investors will send you their money. You'll probably have to send bank statements to HMRC showing that the money's arrived, and then the government will send their check. So all of which is to say it's it's not as easy as your regular funding round, but it also means, so now comes the critical advice, which is, there you are, a startup, and you need money. What do you do? So you've got a few options. Option one is, forget Future Fund. It sounds complicated, doesn't do SEIs. I'm just going to raise as I was before. And good news, everyone else who's going to Future Fund, because they can't get SEIS investment, they harassing the 100 VCs in London to co-invest. So while those VCs are all maxed out, I'll go hit up angel investors. Great strategy, keep going. Forget Future Fund. Scenario two is, okay, I reckon I can get non-SEIS investment, and our survey suggests about 25% of companies reckon that they are qualifying and can find, suitable non-SEIS EIS investment. If you're one of the 25%, amazing. Go find investors. Get your investor consents and your shareholder approvals needed, because you're going to need that if you're going to raise more money, if you've had a previous round, which pretty much by definition you would have. So get all the pieces in place so that when the doors open, you can get in first. Why? Because there's only 250 million pounds. If they're investing £1 million on average in companies, that's 250 companies in all of the UK. Statistically, it's not going to work for you. Now, they've said they'll probably top up more, but when and how remains to be seen, so I wouldn't bank on it. So if you qualify, you want to be first in, best dressed, investors lined up, AML, KYC checks, know your customer checks done, investor consents done, the deal terms explained to them, and then ready to go. And if you head over to See Legals, we plan to support whatever is needed, within 72 hours of it being exactly announced. And in the meantime, there's excellent info if you go to seedlegals.com and the resources funding section. You'll see an article on exactly this, how to get Future Fund ready. There's also a survey you can fill in to say, to help everyone say whether you'll qualify or not, and also my slightly damning critique of the whole scheme as well. So, and you can hit up Anthony at seedlegals.com if you've got any questions. And we don't know how much of it the government will insist happens by filling in paperwork on their site versus how much can be automated. But our goal is to automate on Seed Legals anything that we can.
Fantastic. Thank you so much, Anthony. Some really fascinating data that you shared there. And also thank you for the services that you're providing via Seed Legals. What I'd be really interested to hear from our other panelists is their thoughts actually on Future Fund. So that can be from your perspective or just in the general landscape. So Ray, I would love to hand it over to you, as you intimated in terms of how you raised funding. So please, just share your thoughts on that, please.
So started this journey with this new startup end of Jan. So just before the crisis started, and it hasn't really changed my approach. So my approach was to raise on advanced subscriptions as we built up momentum with the conversations with all the investors, because it just takes time to build all those relationships. And so far we've taken in almost £500,000 on advanced subscriptions, and the idea is to raise. Is to close the round and convert that all when we get the first 7-figure term sheet from a VC. Because we've raised on advanced subscriptions, I think I've given close to zero thought to Future Fund, because I think that doesn't qualify us. But at the same time, friends of mine have been involved in getting this going, so I'm really pleased for them that they've had some success lobbying government, people like Dom Hallas at Codec. But at the same time, I'm not a fan of government handouts to basically VCs rather than actual startups. I think these periods that test us are really important for redistributing skills, redistributing wealth, resetting certain things. Otherwise, we'd all still be farming. But at the same time, it is important that we support startups and innovation and entrepreneurship. And I think the best way to do that is for founders to help each other, to share best practice, to share contacts, to make emphatic recommendations. So while way back when Anthony turned down my ability to invest in seed legals, I am a huge fan of seed legals. I made the mistake, and I should have known better, because every time I've done this, it's always come back to hurt me. I made the mistake of raising the first bits of money into free.co.uk, not using seed legals, and I'm now feeling the pain. The last 2-3 checks we've done, I've used seed legals. It's the most smooth, painless process you could ever imagine. Even better, their customer service is to be modeled on. You know, if you have any problem, you'll have either, you know, the chief legal counsel at Seed Legals or Anthony himself just fix things instantly, which is, you know, you don't get that with lawyers. You certainly don't get that with investors. So yeah, I'm a huge advocate of Seed Legals. Very pained that I didn't get to invest. But I would wholly recommend that if you are raising, before you do anything, speak to other founders, and definitely book in a call to speak to Seed Legals, and they will explain things to you. I had a friend have a call with them earlier this week, and he said, like, it was the best call they had. Like, it explained so much to them. So yeah, my pattern is always the same. Raise as you go along. Don't just try and raise a round. Raising rounds is where people get scuppered. You're trying to do this big bang raise, and it doesn't work out. It's usually in the favor of the investors. So I'm raising the valuation of my business as money comes in, because the business is being de-risked. And so there's an incentive for people to put in a check today rather than waiting for that VC term sheet to come in, which is really, really important. And before I sign off, what I should say is, if you are raising, this isn't about raising money. If that's your goal, you're going to make really rookie errors. It's about building relationships. If you can truly understand the person sitting across the table, or the Zoom or Meet call from you, and understand what it is that they do, you'll understand that they told you a number at the beginning of the call that they usually invest. And if you say anything other than that number when they ask you, what are you looking to raise? It doesn't matter how well the call went. They suddenly go cold. And so it's really important to understand that this is about relationship building. And so it's like dating. You know, if you're on a date and you want a good result, you don't flip your wallet on the table, right? You're trying to seduce, and you're trying to empathize and understand the person sitting opposite you. And so don't talk about numbers. You want them to fall in love with you. And the decision-making center of the brain is the emotional center of the brain. You want them to fall in love with you. The moment you talk numbers, the rational part of the brain turns on, and everything is a, ooh, ah, maybe. Whereas if you appeal to the emotional center of their brain and help them fall in love with you and what you're doing, then everything is it's not a problem. We'll work it out.
Love it, Ray. Didn't expect some dating advice thrown in there as well.
Can I hop in very quickly? So, Ray, firstly, thanks you for the very kind words. But actually, you've raised a really good point, which is what we call agile fundraising. So I think fundraising is, in a sense, even though that's our business at Seed Legals, it's the failure to not have to raise funds. And so what we found is people were doing large rounds, but rounding up all the investors to get on the bus to go at the same time is hard work. And people kept calling us going, we're looking to raise 500K, but we've got 300 or 200 lined up, what to do? So exactly what Ray is doing, which is you can use an advanced subscription agreement, or we call it a seed fast, to raise ahead of a round. It's SEIS, EIS compatible. And then you can do a funding round with a rolling close and top up later. And we find companies are now raising more outside of rounds than in rounds. And exactly as Ray suggested, when you do a round, you're valuing the company today to raise money to last, a year or 18 months. But in a year or 18 months, your valuation should be 2 or 3 or 5x what it is now. So you're giving away all this equity to raise money for, sometime later. What if you could raise enough to last 3 or 6 months, because you don't want to be sitting there, on the edge all the time. And then as you progress, every couple of months, you top up and raise more. So it doesn't mean you have to switch your life to doing that, but you should think about that there is another way of doing it. And when I talk to founders, very often they go, yeah, no, I'm planning to do a round, and then cut to about a few days later, go, that thing you mentioned about raising earlier, I've got 3 investors who want to give me like 100K now, and I've been no, I'm just going to take the 100K now. So in particular, now that times are tough and you've got increased competition, investors want to see that you're going to take advantage of the COVID situation rather than be out of business, maybe look to leverage the instruments you've got to raise faster, or conversely top up a previous round and not have to do a whole new round. Thanks.
No worries. Thank you very much, Anthony, for expanding on that point. Bruno, please, if you could jump in for free.
Just a small comment on the future fund. I think, it's very good that is in place. It shows that there is commitment to the sector, although it's quite small. And as Anthony said, it will probably fund a few hundred startups at the most. But I think for most entrepreneurs, it has to be considered as kind of less resort funding. There will be other alternatives to be explored before you go that route, because it will have some disadvantages. As Anthony mentioned, it brings quite a few disadvantages. So I think it's kind of a less resort funding. But in some cases, it might help the startups go through this crisis, but it's by no means a free check.
Indeed, it's not the silver bullet, and essentially, and it has been receiving so many mixed reviews. So, Roman, please chime in and tell us your thoughts on Future Fund.
I think it's not just the Future Fund, but there are those 3 main things that are available: sort of the furlough, the
Sybil's,
yes, and the Future Fund. There are a lot of startups that don't fall into any of those. So if you are a startup that by definition is all about growth and not profit, so you don't qualify for Sybil's. If you haven't built the relationships with, and for a number of other reasons, what Anthony mentioned about Future Fund, you can't use that. And then, of course, with furlough as well, a lot of startups, many people forget that they are international by nature. So it's not just a UK company with 5 employees or 10 employees. A lot of fast-growing startups are, we're in 40 countries, 400 cities around the world. By nature, half of our team has always been worldwide, and no government support helps for that. So furlough wouldn't help you at all. And we're not alone. There are literally, I don't know the percentage of startups are like that, but I know as a fact that a lot of startups rely on international teams, and that means that neither of those 3 programs help them. So the answer is, it's never black and white. It's never straightforward, and there needs to be bigger, longer, deeper conversations. And I guess that's why Anthony and Mark are starting these conversations. But I think if we could sort of get maybe Stepan's opinion on that as well so both Bruno and Stepan as investors from their side, but from my startup view and sort of CEO view is that all startups are very different, and you can't just categorize them into, Future Fund, all startups. No, it probably will fall 5% or 10% of them. What about the rest?
Agree. They're all not made equal. So yes, Stepan, please, from investor point of view.
Yes, I was going to say that we've mentioned the advanced subscription multiple times, and what we as investors like in it, because you can make it SEISable and EISable if you have a 6 months convertible timing on it. And I suppose a question to Anthony: why wouldn't that qualify for the government scheme? If the startup raises a certain amount of money through government qualifying advanced subscription agreement, let's say 150K, and then in 6 months' time it converts with a bit of money from investors, 125, and plus the government tops 125 on top. So that, in my opinion, that should work.
So a bit more technical background. So the challenge the government had is that what they didn't want to do is set up an investment committee to have every company apply and then they try and do it on the merits, because that would take years. If they've got 10 people looking at applications and you have to spend quite a few hours, is your drone thing going to fly, and is this medtech thing really genuine, whatever it is. So what they wanted is a deterministic way. They also didn't want to look at everyone's legal agreements to see, is this legal one good or bad. So what they came up with is, something to go, if you meet a certain criteria, you're in. We think they set the bar too high for your average startup, but that's separate. But then the next thing is they didn't want, I guess, lots of lawyers profiting by them now needing to read the deal terms of all these different agreements that people had created and then try and work out, actually, the government got a bad deal because you've offered a special preferential right to these guys over here, and we didn't spot it. So they've said the way it's going to work is everyone's going to sign our deal doc. Now, they haven't quite said that, but that seems pretty clear from their term sheet. They could have done it exactly as you've said, which is another way is, hey, the way a funding round works, what Ray's done is he's created advanced subscription agreements for a bunch of investors, one for each of them individually, and the next investor comes along and goes, oh, great, these guys are signed up, great, I'm in. Give me at least as good terms as anyone else, I'm in. And that's called a MFN, most favored nation clause, to go, actually, I don't even need to read the others, as long as you guarantee me that no one else gets a better deal, and if they have, I'll get that deal, then I'm in. But so far, the government haven't gone that way, and they've said everyone has to sign our document, which is okay, except their document isn't compatible with SEI. So what I've done is I've come up with a proposal which is being shared here first, which I've called a convertible advanced subscription hybrid, basically combining an SEIS version and their convertible note into one. I'm calling it a cash convertible advanced subscription hybrid, and I've essentially written up a modified version of the government's term sheet that is compatible, and the EIS Association has that, and they've passed it on to government. And I've then volunteered to create a complete document, which of course then gave me a non-trivial amount of work to do, and I'm still busy on it.
Well, that's exactly the point I was trying to make, is that it's possible to take the terms as they are published today, slot in 6 months convertible time frame, and then you effectively make it EIS qualifiable. So why the government is not talking between the departments, that's quite insane to me.
Well, I think on the government side, there are broadly two reasons why it's not, or three reasons why it's not SEIS compatible. Reason number one is a sort of public policy perspective, which is to say the government is investing now, that's taxpayer money. If the government also allowed SEIS co-investment, that's also taxpayer money. So we're taking far too big a risk overall by double dipping on taxpayer money. It's a valid conceptual argument. I wouldn't buy into it. Reason number two is to say, actually, we're just a bit lazy. We never thought of this. We just went for the closest legal document on the shelf, which is a convertible note. Yep, we got one of these. Oh, bugger, it's not SEIS compatible. We don't know how to fix that. So it's just a lack of creativity. And the third one is that essentially, the provenance of the scheme was, people approached and lobbied government, and the people who lobbied government just happened to, be VCs, and maybe they never really thought of it, or the lawyers or word of putting it together went, oh, great, yeah, we've got a fund that's suitable for, and actually it's larger stage companies rather than the earlier ones that, we, at least the advertisements that you read, thought that it addressed. So if it was to say, hey, if you're a scale-up company and you've raised VC funds in the past, this is for you, that's great. But most of the folks on the call are probably not those companies and probably going, that was a bit disappointing. So, yeah.
Well, collectively, I think there's a lot we can do to lobby the government in the right way. I put my hand up. I'd sign up for it.
All right, good. Thank you.
There we go. We've got one signatory already. And I thank you so much once again Anthony, for all the work you're doing, and also, like letting our audience know first, so everybody take note. And you shared, obviously, that you shared your work with Mark. So Mark, can you just shed a bit more light on what else you're doing in terms of lobbying and other financial options based?
Yes. So a couple of things really. So the conversations we have with government along the lines of, look, we have the future fund now, the best in the world. It's not going to change. As I say, I'm told it's kind of being worked on this week, road tested this week. It's going to be launched on Monday, and I suspect it'll be gone by Tuesday because there'll be a lot of later stage VCs will hoover up that money and get money into their second stage follow-on companies, and away they go, and it'll be hailed a great success. So it's kind of future fund. It is what it is now. So what we've been told is, okay, there's future fund, but there is an opportunity or a potential for kind of a variation on the theme here, where you could do something that looks like and smells like and tastes like a future fund, but isn't a future fund, and could adopt some of the things that Anthony and Stefan have been talking about. So a bit like you have an ISA, you have a junior ISA, and you have a help to buy ISA, a kind of variation on a theme that's well established. So that's one of the things that we've been talking to about them. That's where the idea of an ASA came along in conjunction with Anthony, who kind of put that idea forward, that the next closest thing to a convertible loan note, which is the thing stopping EIS and SEIS being eligible, is an ASA, an advance subscription agreement. So let's just try and slot that in place of a convertible loan note, and that might do the job. Can change the parameters a little bit to make sure it's not just companies that have had 250,000 in the last 5 years. We can drop that barrier down and make it a kind of future fund, EIS qualifying light version of the main version. So that's kind of the road we're talking to HMRC and Treasury and government at the moment, and that kind of discussion is probably a kind of formative stage at the moment. So we'll see how that works out. Just to add to one of the kind of difficulties that Anthony was mentioning there, and he's probably hot off the press for Anthony, so I'll mention it now as well as everyone else. One of the comebacks they did have me yesterday was, if they're going to do an ASA, and you've got a long stop date, I think it's 6 months at the moment for most ASAs. What used to be 12, so it's a possibility of pushing it out to 12. The government are concerned about if they're going to invest, let's say now, and then there's a valuation point or a conversion point in 6 months, they're concerned about how different that company's going to look within that time span. Is it going to be significantly different in 6 months' time from the point when they made their investment? So I think there's some kind of pushback or knockback there. So that's one we need to work through. The other option kind of we're looking at and trying to push forward at the moment, I mean, we're still trying to push very hard to increase tax relief for EIS. I still think that's the quickest, easiest lever to pull for government if they want to encourage investors back into the market, because that's what we're seeing. Investors are kind of run for the hills a little bit here. They're putting their hands in their pockets and saying, look, do you know what? This is a risky time, an uncertain time. I don't know what's going to happen, and I'm not going to hold off making my riskiest investment, which is my investment in an early stage EIS or SEIS company. So, you know what? I don't need to make it now. Just wait 6 months. I'll wait a year and do it then. So, look, I fully understand that view. Obviously, it doesn't help those companies in the meantime, but we need to pull a lever to try and get them to invest again. So we think tax relief, increasing it from 30 for EIS and 50 for SEIS, but maybe bumping those up a level might help get investors back to the risk table. So we're still pushing that. We're told that's a kind of longer term game, if you like, and we very much hope that will be looked at in the future. The thing holding that back at the moment is that it would take a change in legislation. So it'd have to go through Finance Acts and Indian state aid and various kind of barriers and processes, all of which take a long time, even, I'm afraid, at a time like this, and we're trying to get things done quickly. So that's a long race. We've got ASAs which are kind of in the pump work at the moment, if you like, in the factory being looked at. And the other thing we're looking at is investment programs. So we have a number of investment programs across the UK already. So trying to think of London co-investment funds, Scottish co-investment fund, regional angel programs. They're all kind of up and running. Angel co-fund, all up and running already and investing in small businesses in different ways, shapes or forms. So we're trying to put a proposition together that perhaps uses all the different elements of those different programs, but specifically aims obviously for COVID-19 affected small companies and startups at the moment. So that might be a way of doing all this stuff, because a lot of what's in play already is either set up and has been for a number of years, like EIS, but it has its own difficulties with. Don't talk to me about EU state aid rules, because that's always a big one. Then we have the new stuff in terms of future funds, CBILS, etc., etc. So this will be adding to the mix really. And I think that's the point, because of all the schemes out there at the moment, there's some good schemes. They're doing some good stuff. You know, CBILS does some good stuff, Bounce By does some good stuff, even Future Fund. would hold my hands up and say can help certain companies in certain situations. But I think that, as you said earlier, there's no silver bullet, there's no panacea here. What we need is not one option or two options, it's a whole suite of options. And at the moment, all the options pretty much are debt options. So we're asking more and more of our companies to take on more and more debt. I just don't think that's a great, sustainable, long-term situation for a lot of companies, particularly in the UK, where equity is more prevalent. So I do have my worries about we've slightly become slight debt junkies, and they seem to have pushed equity to the side a little bit. So yeah, that's our kind of raison d'etre, to try and put equity back on the map for a lot of small startups and scale-ups.
Lovely, Mark. Thank you ever so much. In terms of, you've got the short-term measures, but also the long-term plan. So yeah, I'm sure we all wish you all the best with that, because it certainly seems you've got your work cut out for you. Obviously, BB's focus really heavily on funding and obviously like that and raising funding. What I would love to hear is maybe some of the less spoken about challenges or less publicized challenges that startups are facing at the minute. So Roman, I'd come to you first on this point, please. Can you share anything from your own perspective or anything that you've been discussing amongst peers?
So no startup is the same, and I continue. So as Ray mentioned, the best thing you can do is sort of over communicate and talk to other startup founders, CEOs, and just exchange battle stories and just help each other wherever possible. So I do that on a regular basis, and every startup is very different depending on their stage, on their experience, on their client base, on their funding requirements. So what is relevant to us could be not relevant to others. And so for instance, working remotely for us works absolutely fine. That's not a challenge. For some companies, actually it is. For some companies, funding is an issue. For us, it isn't, because we recently raised, we've sort of streamlined our operations, and we are fine. For some companies, it's operational part, i.e. they are overwhelmed with clients. For some, it isn't. So it's very different. And again, I think from my side, I would actually just sort of reiterate Ray's point. The best thing founders we can do, in sort of CEOs, is just to talk to each other and glean some sort of pieces of information and advice from each other, not from, I don't know, the internet or from newspapers or anything, but just talk to real people. Talk to your investors, because they have other startup founders in their portfolios and they'll introduce you to the right people. And then you sort of will combine this experience into valuable lessons. So yeah, sort of in short, in this crisis, the only piece of advice I can give is just to over communicate and just talk as much as you can to people in your network, and that will help either with clients or with anything really.
Great advice, thank you. I'd love to come to you. Yeah, next day they can jump in anyway. Thanks.
Yeah, so I mean, I completely agree with you, and then I would reinforce how important it is to speak with investors, because I mean, as investors, we see many ideas, and we're exposed to many more different situations that many times the entrepreneurs are exposed, because we're speaking with really a lot of people, and also I think we may have the advantage in the short term to be able to take a step back, like, and try to see the big picture without having like the pressure of a CEO, an entrepreneur, to struggle with the runway, to letting people go, to see the team suffering a big impact. So I think as investors, we may be able to steer in the right direction in taking a more like long-term perspective. So I think it's very valuable that those conversations. Just on the former point, I mean, of less publicized challenges, I think that in addition to that more publicized, so extend your runway, make sure to do streamline operations, and all those things. I think there are issues in many companies around team dynamics that might be lost in the noise of the situation. That might have an important like business impact in terms, are we being able to capture all the creativity, all the ideas that happen in our team? Are we being able to keep a good team engagement, team morale, to develop a culture? So that are things that we sometimes forget in the very short term heat of the situation, but they might come back and bite us in the future as well.
Thank you very much, Bruno. Very valuable information. Ray, would you like to chip in here in terms of anything that's less publicized for startups?
Yeah, so Archie Wilkinson, who I'm a big fan of, just put in a question for Anthony, really. So we should definitely answer that afterwards. If anybody doesn't know, Archie is the founder of Lifesaver, which is a battery pack, which is literally a lifesaver. Everybody should check that out. They've delivered a ton of these to the NHS, which, you know, you'd think a battery pack isn't the most essential thing, but if you've been working a long shift, being in touch with your loved ones is really important, and a dead battery kills that off. What I would say is, just to reiterate, you know, as a founder, I'm available to speak to people, right? I probably spend about 20% of every day speaking to other founders, and I make a point of it, because if I don't, then the rest of the time I'm really just speaking to investors, and they largely sit on the other side of the table from us. And so, you know, if you want to reach out to me, go to free.co.uk. When you put in your email address, the next page, it gives you the ability to book a phone call with me. So, you know, gets rid of all the to and fro of email. You know, let's just talk. Happy to talk. I'm very generous with sharing investor contacts. I think that's the best way for people to raise, is through building relationships. And yeah, just feel free to reach out. Feel free to reach out to people like Anthony and Roman. You know, you'll get like literally all the war stories. I think one of the things that people don't tell you when you want to scratch that startup itch is that you will bleed. And, you know, knowing these things in advance will save you a whole ton of time and pain.
Lovely. Thank you so much, Ray, especially for offering your time, which is very much needed. Next, I would love to move on to what else we can do to save our startups. So if we can go to Stefan first from an investor's point of view, or you can, you know, cover the landscape in general, but what else do you feel we can do to save our startups at this time?
Well, definitely lobby the government to do the right paperwork. And collectively, we do have a great bunch of people here. I think we can do a lot. The smoother, the quicker we can make it for the startups, the better. I think there should be more awareness from the investor side and from the VC side on the mental health of the founders. And we should give them a lot of slack at the moment, because not only they've been pressed for, oh, you have to deliver, you have certain KPIs or else kind of thing. But then on top of that, you have the current situation. So I would have communication with all of the founders in your portfolio and say, look, guys, that's fine. Let's all relax for at least a couple of months, provided you have enough money in the bank, of course. But the message shouldn't be, oh, if you're not going to turn this around, we're taking it off you. So that some practices we see in US, the very draconian one, shall we say, I would definitely try to avoid those and be a lot more understanding. So that I would flag as a key point.
I love that. Exercising empathy, which is always, but even more so now at this time. Thank you so much, Stefan. Just conscious of the time, and we do have a number of questions to jump in. So let's start with the first one, which is from Archie Wilkinson, which Ray kindly mentioned. And Archie said, I have raised £315,000 ESI right now, and previously 150k SEIS. Can I use part of the 315k I have just closed to declare that with the cash Anthony mentioned?
So the answer is yes. If you've raised more than 250k, then that is going to be used so you'll qualify for the fund, but you can't use that investment as part of the match funding. So you're in the door, but you now need to find 125k of new investments. So one of the interesting things overall with the fund is it's a sort of gamified thing, because you want to encourage, you want to help startups, but you also, as a sort of public policy, need to figure out where the best use of funds goes overall. Should it go to propping up, EasyJet or British Airways, or should it go to lots of small companies? Should it go to medium companies? These are bigger policy questions, but you also want to set it up. For example, the government could have said that if you've raised money in the past, that money can count towards their match funding. But by not doing so, which I think is correct, they're saying, actually, we're going to spur twice the amount of investment. Because had they said, actually, existing investment can count towards the match funding, over the last 3 months, UK startups have raised, well over £1 billion. So within 8 minutes of the doors opening, their entire pot of money would have been consumed by people with existing investments, rather than have the investor community motivated to now put more funding in. So the short answer to the question is your money will count towards getting you in the door, but you have to find new money now for match funding.
Lovely. Thank you very much, Anthony. The next question we've got is, when is the Future Fund Scheme actually launching? If anybody on the panel knows, please share the knowledge. Mark?
Yeah, I'm told it's Monday, but there hasn't been anything officially launched yet. But yeah, I keep your eyes and ears open.
All right, Mark, if you know the Monday, that's awesome. I meid, they've said sometime in May, but nobody knows much about it yet. So I will
Monday. That one tonight is a different kettle. I understand. Yeah, until Monday, I understand British Business Bank are having a meeting with stakeholders pretty much right now, and it's all planned to kick off on Monday.
Okay.
I'd probably throw another week on top.
You've met.
Sorry, Mark, what was that?
But you've met the government, obviously.
Yes, indeed.
Fantastic. Okay, our next question is, let's keep on the theme to government. Should the government get a stake in all the startups that need help? Would you want something in return if you were them? And that's from Ricardo from Maggie Memories. So anyway, yeah, to the floor, anybody feel free to share your opinions if the government should get a stake in all the startups they have.
So that's an interesting question, and it depends on a situation where so it's very individual again to each startup. So if you're running out of cash, of course, you'd rather have some sort of chance of succeeding, and you don't want anyone. But if you have a chance, so if you properly plan the cash flow and you have a good runway, do you really want someone who you haven't dealt with? So investors, basically, again, coming back to the same message, investors is almost like a marriage. So it's for a long time. You want to know them really well. You want to, it is going to be a weekly, monthly cadence of communication with them. You're going to go through sort of a lot of hard situations. And if no one has experience of working with a government, some of us have, but none of us, I don't think, has experience of working with a government as your spouse or as your sort of long-term partner. So yes, we have applied, we've tendered for work with them, you know how difficult it is, but now imagine having a partner for life that is just as difficult. So it's this kind of balance that is very difficult to strike, and for some who have enough runway, probably you wouldn't want it. If you don't have, then probably you have no other option. So to me, I see it as a very difficult question and very individual to each one.
So I'll hop in. So there are two sides, one from the government and sort of taxpayer money side, and the other one from the startup side. So I think from the government side, if they have set a good criteria. They've said they can't do an investment committee and pick, the drone ones or the others, because that would be way too slow and people would say it's unfair. But if broadly the criteria are right, in the best case, they have a return on their investment. So when all the notes convert, actually the government's in the money. That would be awesome. Companies have exits, their next round, the government makes a return. Wouldn't that be good, as opposed to all the money just being given? It still goes to fund people's salaries, but if they could make a return on investment, amazing. From the company's perspective, the deal terms are more onerous than you'll get from an investor. Currently, the government wants a 2x return on its money in 3 years if you haven't raised a round, which is a serious problem. It could bankrupt your company if you haven't raised in the next 3 years. But apart from that, I think they're going to be a completely passive investor. They just don't have the time to get involved. So I wouldn't be fussed having them. I don't think they're even going to want to get management reports from you because there's no one who's going to read it. The one worrying thing that they have is that they have the ability to sell their debts or their investments to a third party, which means that they might go to a VC and sell their entire portfolio or sell it to multiple VCs. And when you thought you had the government as an investor and they were totally never going to care what your company did, because firstly, they don't have the time, and secondly, what would they want you to do? They're not going to go, well, I think you should expand your operations more into SaaS model. They're not going to do that. But if they sell it and suddenly a VC, maybe an unfriendly VC that has bought this debt for large amounts, for billions, they might be wanting to leverage the opportunity, and they then might want to put the squeeze on companies. So I think, to me, that's the worrying piece. And there, your goal is, if you do want the match funding, to take it and then try and raise your next round at the earliest opportunity to get them out of the business. Well, I mean, they'll be equity holders, but they'll have a couple of % equity in your company. Big deal.
Yeah, well, that's it. Yeah. Bruno, please.
Yeah, no, I agree, Anthony. That's probably one of the bitter pills inside the whole deal, is this ability to sell, and you don't have any control of that. So I would just mention something I mentioned at the beginning. I think it's a very valid in some cases, but it should be considered as almost the last resort if you don't have any other options, because there is a relatively high price to pay for that fund.
Thank you very much, Bruno. So we've got a couple more questions. And the next one is, what about entrepreneurs who are just getting started? Seed funding has vanished. So again, please, to the floor. Anybody like to jump in?
Sorry, go for it, Ray.
Just the same thing. Just get to know other entrepreneurs. That's how you build out your network. People that back you will make great recommendations to their investors, and that's the best way to build your investor network.
Seed funding has vanished is fake news. So what I'm seeing is that actually in April and March, there was a record month for closing rounds. That was because investors were wanting to take advantage of the end of the SEIS tax year, and founders were wanting to close their rounds in a hurry before people got cold feet. Since then, I would say there's been maybe a 50% reduction in rounds and maybe a 50% reduction in people applying for advance assurance. I mean, we've got, great insight. We think about 1 in 8 of all advance assurance applications in the UK goes through legals. So we've got better insight than anyone else. And I see about a 50% reduction in the number of advance assurances, which is a good, or in this case bad, leading indicator of what funding rounds will be in a few months' time. But I think I'm seeing an increase in people raising before and topping up a round. So using seed fast agreements to raise ahead of a round. So instead of people closing a 300 or 500K round, they're raising 10K, 20K, 50K to get them to when times are better and then do the round there. So I think one of the key things we've been discussing is, how do you sort of save startups? And I think, when you become a founder, you are, you're embarking on a journey where, there's no one, that there's no one going to help you. You're going into the desert and you plan to come out the other end. And it's nice that the people are there to help you, but you should assume that you have to make your own way and forage through the desert or jungle. and therefore adapt to the situation. And adapting means obviously tweak your product as far as you can to the times. I see a great example. There's a company that raised on Seed Legals 100K probably about a year ago, had a sort of so-so proposition for tracking for elderly people. Guess what? They've pivoted, or at least their website messaging, so it's now about COVID tracking for elderly people, and they've got an oversubscribed £1.5 million round. So I think obviously if you're in a gym or a restaurant, your possibilities are more limited, but I think in many cases you should leverage the opportunity. And then also see, do you need to raise a big round? Can you raise a smaller round? Should you furlough people? That's putting everything on hold. But there are a number of mechanisms available. I think the furlough is the negative one, but in the positive ones, and of course it's easy, for someone to talk if they've got a SaaS business rather than a gym, in which case you really have a problem. But there are probably more things you can do than might jump out, and you probably shouldn't be assuming others will help, because there are many people screaming out for help, and so as a founder you might be on the journey where you have to sort things yourself and want to sort things yourself.
I think if there is one, do we still have time?
Yeah, we're just running slightly over, but yeah, please jump in now. People are still tuned in. Go ahead.
Just probably would be a good way, not necessarily to finish, maybe we can get a few more questions, but the whole idea of startup is not to raise money. That's one thing we need to remember. It's not about fundraising, is not even secondary or tertiary. It's an important part of a startup journey, but it's about finding a problem, a big enough problem in a big enough market, and solving it in a different 10 times better way. Funding comes later to scale that thing, basically when you want to be ahead of everyone. So you found that niche, you found that problem, and then literally you can either grow 2, 3, 4 times a year, or you want to go 10 times a year, and that's when you need funding. But you don't need funding to launch something in most cases. In some, of course, when you're talking biotech or a lot of R&D, then yes, but out of thousands of startups in the UK, you can do a lot now without it. So it actually puts an emphasis on what really matters, is finding those customers with big enough pains where they're prepared to give you their time or their money. And then it's about funding. And so if you find that product market fit, then funding will come inevitably. So yeah, it's important, sort of from my point of view, to say to all the aspiring entrepreneurs, startups are not about funding, not at all. I mean, it's an important part of their life, but it's not about that.
And the funding money still exists. I think that's also a compliment what Anthony was saying, that the funding didn't disappear. Funding money still exists. We, for example, didn't stop investing at all. We keep the same pace that we had before. But if we think, overall, I think last year European VCs raised most money than ever. They raised 13 billion in 2019, and this year, in the first 3 months or 4 months, they've raised 7 billion. So they've raised more than 50% they raised last year. So the money still exists. I think it will be, if we think some years ago when it was more difficult to get investment because there was less money available, and the VCs were really testing much more and checking and being much more thorough in their investments. I think we might be in that situation that we were maybe 5 years ago, but it's still good companies, good founders, good propositions can still be funded. I think it by no means it dried up, right? There will be some impact in the future, of course, but I think it's still available for the good cases. The funnel probably got a little tighter than it was before in terms of how the startups will progress, but it's by no means closed.
Completely valid point, Bruno. As the money still exists, it's still out there.
Yeah.
So our final audience question before we wrap this up, because I know we've gone slightly over time, so thank you for everybody for sticking with us. So I'm going to direct this solely to Mark, because I think he's probably best positioned to answer this. So does the panel expect to see any changes in ESI regulations in the months and years ahead? Feel free to add anything that you haven't said before, Mark.
Yeah, good question. So we're not expecting anything in the short term. As I say, that's kind of a long-term game. We've been told that if the situation is still occurring in September time, when Future Fund is due to finish, by the way, so it's supposed to finish in September, it's already gone by then, that there might be opportunities to look at changing legislation and talking to the EU about state aid and boring and dull things like that. So yeah, there's still opportunity. I guess what I would say is, and it goes trying to counter to what we just said a minute ago, and I don't want to finish on a negative point, but I will. But Anthony talked about leading edges, that we are nowhere near the leading edge of this economically. I mean, there was data released this morning saying GDP was down 2% for the last 3 months. Bearing in mind the first 2 months we didn't have COVID, so only really covered probably 2 weeks of COVID. And they're expecting GDP to be down 20, 15, 25% for the next, I mean, that is unprecedented, isn't even the word. But the only thing I can kind of look back to and think where there's a kind of analogous situation is 2008 when we had the liquidity crisis. And the first funding to go from investors was, again, early stage, kind of EIS, SEIS, VCT funding. They were the first investors to kind of move away, and they were the last ones to come back. And that took about a year to kind of get back to normal, regularized levels. So, you know, if we're going to see the same thing here, it could be, where are we now? May 2020, it could be May 2021, it could be pushed out further than that. So I go against Bruno's view slightly. Sorry, Bruno. In terms of fundraising is okay, and it's starting to come back. I think it might come back, but then it'll dip away when everyone starts to get hit by the economic situation, that this tsunami that's coming at us in the next few months. COVID's obviously peaked and going down, but in terms of where we are economically, we're nowhere near the peak, and we're certainly nowhere near coming down the other side. So I think the good things, trying to end on a positive note, for startups are the most flexible, pivotable, easy to move the companies out there. So they're the best placed companies to take advantage of opportunities. Big blue chip companies are like oil tankers. They take an age to move. They can't make decisions. They're rubbish at that stuff. So this is a real, I think, opportunity for startups and scale-ups to get in on the ground floor. Okay, look, things aren't great at the moment, but if you have a great idea, if you have a concept, an idea, a thought, particularly in the tech point of view at the moment, on the medical side, biotech, medical, a whole load of different sectors. With communications, we're talking on Zoom today. Who knew about Zoom 3 or 4 months ago? So there's a real environment here where startups and scale-ups can come to the fore and kind of give us that growth that we're obviously going to miss out on. So that's my positive note to kind of end on, that I think it'll be startups and scale-ups that really do give us the growth back in the economy that we're going to desperately need.
Indeed. Thank you very much, Mark. And it's very important for us to remember that these things are cyclical and to be mindful of that. And as you said, be agile and flexible at this time. If anybody else would like to chime in for one last either final thought or final words to the government, feel free, and then we will wrap up, because I said we're running over time. So feel free if you would like to. You're good? Okay, great. Lovely. Thank you so much, everybody on the panel today and everybody tuning in. I'd like to, as I said, thank our panelists, Bruno, Roman, Ray, Anthony, Stefan, and Mark, and everybody who tuned in for the past 60 plus minutes. And of course, those who submitted questions. We really, really appreciate you. To all the founders, to all the teams, all the investors, keep innovating, keep shining, keep being flexible. And please continue this discussion with us at Splento, so you can catch us on either Twitter or LinkedIn, and please obviously connect with all our panelists here today. And all I have left to say is that it's been an absolute pleasure to host you all. Stay safe, and until next time, goodbye.
Thank you.
Bye. Thank you.